So the very first trading bands that I know of were created by Wilfrid LeDoux. Wilfrid LeDoux was a Canadian, moved to California in the gold rush era and lived on the east side of the Central Valley up in the foothills. He was an avid trader, he was an educator, and he got his data from Barron's, so he only had weekly data ever, right? And that weekly data got put on a train in New York, trained out to California, and he got it maybe 10 days after Barron's was published. So not only did he trade on long-term data, but he traded on long-term data with a lag. So what did he have to be, basically? He had to be a trend follower. There was no other possibility for him. So what he developed was an early long-term swing trading approach, trend following approach, and what he did is, using weekly and monthly charts, he drew lines that connected the high points of those weeks or the high points of those months, and another line that connected the low points of those weeks and low points of those months. He didn't bother to plot price, interestingly enough, because all of his information came from the bands, right? What he was looking for was for a band to come down, the upper band come down, bounce, turn, and then when the lower band took out the trough created by the upper band, that was his buy signal, and the reverse the same. At a high, he would look for the lower band to come down, turn, make a peak, and turn down, and then when the upper band crossed over that peak, that was his sell signal. So that's what a LeDoux chart looked like.